Welcome to Market Domination, sponsored by TC Trade. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. Stocks soaring today following a U.S.-China trade truce to temporarily slash reciprocal tariffs.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
We achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. The talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big Pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries.
Look at that, an all-President Trump headline blitz today. We got an hour to go until the market closes. We're taking a look at the major averages, and obviously it is the president who is affecting markets today. He, with some a little assistance from Treasury Secretary Scott Bessent, a meeting with Chinese officials over the weekend in Switzerland, and as we know, coming out with the reduction in tariffs, at least for now, to 30% for stuff incoming from China. So the Dow rising almost 1,100 points, about 2.6%. The S&P 500 up 3%. The NASDAQ up 4%. All of them seeing the biggest gains in about a month. The Russell 2000 also participating. It's about 3.5%.
It is a risk-on day, so the U.S.-China trade truce or reprieve, Julie, maybe detente, whatever you want to call it. You can see that big relief in the markets today. Our colleague Josh Schaefer has a really good piece on it. I know we're going to talk to Josh later in the show about it. And basically, Josh had the chance to speak to some very well-known, very well-regarded strategists, and they were kind of trying to make sense of the moves today. And some of them just telling Josh, listen, at the end of the day, they're just reminding us markets are about expectations, right? And relative to expectations, their point to Josh was the short-term news is being clearly taken as better.
Yes, to put it in perspective, of course, when you look at the year-to-date chart of the major averages, they're still down a little bit, or little changed at best, right? So this is not the coast is totally clear and we're growing gangbusters. It's things aren't as bad as they seem to be here.
Off that April 8th low.
Exactly, exactly. So that's kind of the vibe that we're getting at in today's session. Here's the NASDAQ 100. If you take a look here, you really see some big moves on the part of large cap tech in particular. I mean, Amazon, it's clear here what the tariff implications are. When you see a stock like that up by nearly 8%, it's clear for something like and Apple as well, obviously, although they had already gotten some exemptions, but nonetheless, up 6% today. It's less clear what the direct effect is on something like a Meta, and Meta's up more than those guys. It's up 7.6%, but there were some implications for if we get an economic downturn, will you see the strength in advertising, et cetera. So there's a lot of feed-throughs for everyone, even if it's just sentiment-wise, right?
Absolutely. All right, let's get more on this because stocks climbing, as Julie's pointed out, as the U.S. and China agree to reduce tariffs for the next 90 days. President Trump highlighting the reduction in a press conference earlier today.
We achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues.
Well, here to help us break down the details now is Yahoo Finance Washington correspondent Ben Werschel. Ben.
Hey guys, so quite a series of rapid fire developments today after this early morning announcement of this 90-day pause from 145% tariffs on the U.S. side and 125% on the Chinese side. One through line today, I think, is we're kind of getting a sense of the key next steps to come. as we're digesting this deal. The first one you alluded to at the beginning, which is a Trump meeting with President Xi Jinping. He said that could happen as early as this week. That would be a major moment in terms of kind of finalizing a lot of the underlying issues here that are kind of a bit being glossed over by this tariff reduction, but are really complicated, and they have to figure out at least the next steps on to sort of see momentum continue here. The next is more meetings between Treasury Secretary Scott Bessent and his team and the Chinese. Bessent said today he expects those in the coming weeks, so that could follow quickly. There's a clear desire here on the part of the White House, at least, to keep momentum going here. And then a third one that I think people maybe aren't recognized enough is the other tariffs that Trump has in the offing that could complicate this story. I think it was important that Trump made a note today that this deal does not include pharmaceutical tariffs, which he said that he alluded to the fact that they are coming. He's promised that pharmaceutical tariffs and semiconductor tariffs will be announced in the coming weeks. There's investigations ongoing on those fronts. So those are coming, and those are going to be big moments in terms of kind of what this overall tariff picture as we kind of have another 90-day clock ahead of us between the U.S. and China.
And of course, he also signed a separate executive order having to do with drug prices. We're going to talk more about that a little bit later in the show. But there's another question I have for you about the China tariffs, which is recently we had the removal of the so-called de minimis exemption, right? That goods worth $800 or less that were being imported into the U.S. had been exempt for a long time from tariffs until, what was it, a week ago Friday or whatever it was. So, so does this affect that at all? Do we know?
It does not appear to affect that. This is a good example, I think, of if you're in this sector, you're better. You're definitely better than you were yesterday, but you're worse than you were on January 2nd. So the de minimis exception was revoked. It was on May 2nd. This allows these goods under $800 to have duties on them. They will get a decline in their tariffs because of this deal if it's coming from China. So the 145 to 30% is a big break for these companies. These are Chinese firms that would import things directly. But as I mentioned, there's no clarity. There was no mention of the de minimis exception in the joint statement, and the leaders didn't bring this up. So the de minimis exception appears to still be revoked. So you're kind of better than you were a few days ago, but you still are paying duties to the government.
Right, definitely. All right, Ben, thank you so much. Appreciate it. And stocks are continuing to climb as the U.S. and China agree to slash those tariffs for at least 90 days. But as U.S. markets celebrate, our next guest says the agreement could be a bigger win for China. Joining us now, Zongyuan Liu, fellow at the Council on Foreign Relations. Zoe, thank you so much for being here. So a bigger win for China. Why is that?
Julie, thank you very much for having me. I think this is in fact a bigger win for China, not just because basically the Trump administration over the weekend has nearly undone the Liberation Day tariff over China. But then on top of that, it seems that the whole strategy of building allies to isolate China with regards to building a huge tariff wall to separate us versus China, that strategy seems to not be working because China, our tariff on China, the Trump administration's tariff on China now is only 10% higher.
So what comes next, you think? Because Bessent was talking to press this morning and suggesting he'd be meeting with Chinese counterparts again in the next few weeks, kind of iron out a bigger agreement. What do you think the bigger agreement looks like?
Josh, you are right to point out that Secretary Bessent mentioned the mechanism, and in fact, in writing in the agreement, they mentioned about the mechanism for continued conversation. Now, here is the trick, right? Although some Trump administration officials frame this as if we have reached a breakthrough, we have reached a deal, but you do not see the Chinese call it this way. The Chinese frame this as we made progress in resolving differences, but the Chinese never said this is a major breakthrough. So going forward, we probably will see continued conversation between the two sides, and now we have 90 days for both sides to figure out what they want and what they are willing to compromise. But ultimately, so far, we still see an asymmetry in terms of governance style. On the one hand, President Trump has featured prominently in media, and then on the other hand, President Xi Jinping has never given any comment about a tariff yet.
So I can't help but wondering, what the point of this exercise was. Now, we know it's not done yet, so we don't know what the two sides will agree upon. We don't know what the U.S. will get out of it, but the U.S. initiated this. So what does a best case scenario look like, and does it put the U.S. in a better place than it was on January 1st, say?
I'm afraid, Julie, that I'm not as optimistic because, it is relatively easy to undo the self-inflicted tariff rates, but it is very hard to undo the damage that it has done to America's credibility and perhaps to a certain extent the role of the US dollar, not just in the short term, but also in the long run. Now, the best case scenario for American consumers perhaps would be we return to the pre-Liberation Day tariff scenario, but that is going to take a time. And then the better scenario, the best case scenario for American manufacturers is that through a period of time, and this is going to be a long period of time, that American suppliers, American manufacturers, American industries are able to build an alternative supply chain relatively independent of China. But this is going to take forever. And we simply cannot bring all the manufacturing jobs back to America through tariffs.
Zoe, I'm curious to find out more, get your line of sight on what's going on the ground in China right now. I asked because Kyle Bass, Zoe, posted on X yesterday. Let me read you what he said. He said China came begging to the United States as thousands of Chinese businesses shuttered and failed each and every day over the last few weeks. Factory activity, he says, contracted at its fastest pace in 16 months. Widespread factory closures and job losses. Worker protests have erupted in various regions. I mean, that sounds obviously, he's painting a rough picture, Zoe. I'm curious, does that dovetail with your understanding?
Josh, you're absolutely right. There are a lot of these kind of narratives over the past few months, and even since last year, this kind of a triumphant tariff over China that is going to not just crash the Chinese economy, but perhaps through the crashing of the Chinese economy leading to higher unemployment that is going to destabilize the Communist Party regime. And I think is this kind of overly stated triumphant narrative lead to the Trump administration officials' overestimation of their leverage over China. And in fact, what we are observing now is that this is not a tariff war. This is really about who can endure pain for longer. And guess what? The Trump administration's Liberation Day tariff lasted barely for 39 days, which basically means that from Beijing's point of view, they now have a better understanding of the timing of how long the Trump administration could endure the pain, the pressure from American business, from U.S. domestic constituencies. But on top of that, China has also augmented its series of domestic measures to fight back against U.S. coercive measures, including but not limited to export controls. So overall, I'm afraid that a lot of these triumphant narratives led to the mismanagement of the trade relationship with China. I think it's okay to be tough on China, but you ought to be smart in executing it.
So Zoe, was there indeed, though, protests on the ground in China and this sort of groundswell of protest against the Chinese administration?
Protest. This is really in terms of numbers and scale. And we even during COVID time, people and media and social media reported about protest again on Chinese people going on the street, and it has been for a variety of reasons: for zero COVID, for COVID lockdown, for people losing their jobs, for a fire in Urumqi, and now for factory closure, or for people who has not get paid. So people have protested for decades for various reasons, and this is not the first time. And guess what? The Chinese government spent more money on maintaining domestic stability than on national defense. In other words, they understand how to mitigate the domestic risk.
So always great to see you on the show. Thanks so much for joining us.
Thank you for having me.
Stocks soaring today in the wake of that U.S.-China trade truce. For more on the rally and what it does mean for investors moving forward, let's welcome in now Christian Chan, Asset Market Chief Investment Officer. Christian, great to see you on set.
Thanks for having me.
So the U.S.-China trade truce, we'll call it, Christian. I mean, the market's clearly very happy about it. Are you as excited about what you're reading today, the headlines, the reports, Christian?
You know, I am cautiously optimistic on what this means. And in my view, what this really means for markets is that the worst case scenario is largely taken off the table. And when I think about market expectations, I really do think about the probability weighted view of what might happen. And if that worst case is off the table, then I think there's really good reason to rally.
But rally from here, I mean, as I was talking about earlier, if you look at the year to date now for the S&P 500, we're not much change. We're down like less than 1%. So yes, the worst case scenario is off the table. But if you look at where we were January 1st, there are now 30% tariffs on China. There are 10% tariffs on everywhere else in the world. So does a 1% decline in the S&P 500 year to date price that in?
You know, I think it actually prices in a potential range of outcomes. And when I kind of think about what happened over the weekend, again, that worst case is off the table. And as long as companies can adjust their supply chains over time, I think they'll continue to be able to grow earnings. And that, I think, provides a little bit of an off-ramp, if you will, for the equity markets in order to continue to grind higher. So when I think about tariffs, yes, we were at, call it 25% before this weekend, and now we're at roughly 10%, kind of a weighted average tariff, if you will, from the US perspective. All of last year, we were at about 2.5%. So there's definitely an increase, I'd say, impulse of stagflation, right? Lower growth, higher inflation. But I think the economy, and the data has so far shown this, the economy coming into this year, coming into Liberation Day, was strong enough, I think, that we'll be able to avoid a recession, or at least a deep one. And I think a deep recession is almost off the table if we could get an agreement hammered out with China.
So, Christian, when you saw those reports today, did that change in any way or affect your views of the Fed, how many times they cut and when they cut?
Not for me, but I think markets clearly. I think we were pricing at 4 cuts as recently as 2 or 3 weeks ago. Now we're at about 2 cuts, which is what the Fed forecasted all along. And our read of last week's conversation of the press conference with Powell was that they were going to be very patient in terms of cutting rates and using really all 3 mechanisms. So
did that decision make sense to you? Did you think that was the right one?
Yeah, I think it did.
Pat?
I think it did, because you never know what's going to happen in these negotiations. I don't think anybody thought that this would necessarily happen, in the subsequent weekend. But I think Chairman Powell will not only decide to raise or to lower, but it'll also think about the pacing, right? How long it waits between each Fed action, and then also the magnitude. Is it 1 or is it 2?
So if you're looking at where to position in the markets right now, and you're looking at some of the groups that are rising today because they're not going to be as severe an outcome as thought, retailers we've been seeing, tech we've been seeing, do you go into those areas today, given that there's relief on some of them, or do you sort of position not trying to guess what's going to happen with the tariffs?
Yeah, I would be inclined to lean into some of those areas, including technology and semis, that rallied really strongly on the news today, because not only do we have some trade tension relief, but we also have tailwinds that we saw throughout the first quarter. So when you look at the first quarter GDP report, we saw good investment spending on largely technology and AI development, which I think will be a great tailwind for those types of companies.
What about the Sell America theme, Christian? I was hearing so much about that just a few weeks ago. Were you ever a believer in that?
At the margin, I was more a believer of a very gentle rebalancing of dollar-based assets around the world. If you look at central banks around the world, they're overly allocated to US dollars, I think, from most people's perspective. So what we've seen really over the last 5 years is just a rebalancing away from being overweight to the US dollar for a lot of reasons.
All right, thanks so much for being here, Christian.
Thanks for having me.
Appreciate it. We're just getting started here on Market Domination. Coming up, President Donald Trump announcing a new executive order forcing drug makers, or actually asking drug makers, to lower prices. That's sending shares of those companies higher because the feeling was it could have been worse. We're going to talk about the president's plans and discuss what's next for the industry when Market Domination returns.
President Trump announcing his intention to cut drug prices on Truth Social. This morning, Trump also talking about his plans for Big Pharma during a press conference earlier today.
Some prescription drug and pharmaceutical prices will be reduced almost immediately by 50 to 80 to 90%. Big Pharma will either abide by this principle voluntarily or will use the power of the federal government to ensure that we are paying the same price as other countries.
For more, we're bringing in now Yahoo Finance's Jordan Weissman. Jordan, great to see you. Walk me through what you make of today's announcement, Jordan.
As one of the experts I was talking to today told me, this executive order really raises more questions than it provides answers. Donald Trump is talking about implementing what he's calling a most favored nation plan, where the U.S. would pay no more for prescription drugs than the lowest amount that other developed nations pay. He actually tried to do something like this at the end of his last term. They rushed a version of it out, a slightly narrower version of it out the door at the end of 2020. And I think the technical term for what happened was he got absolutely stuffed by the courts. Federal judges blocked the plan basically on technical grounds, saying that they hadn't kind of crossed every T and dotted every I that was necessary. But the lawsuits also suggested there were a lot of other challenges that a plan like it could face. Trump here is talking about kind of going at it more aggressively, using kind of jawboning companies to try and go along with it, and then using regulation and maybe even investigations to force them to comply, and then also trying to pressure our trade partners to pay more for prescription drugs so that pharma companies don't feel the need to charge Americans as much. It's ambitious. Will it work? Who knows? It's hard to. People I've talked to are expressing some skepticism. Let's put it that way.
Jordan, one of the ways that Trump does have maybe a little bit more power is with the prices that the government itself pays for these drugs, right, through Medicare and Medicaid. So there, do we expect to see some changes and then maybe a ripple effect through the system somehow from that?
Yes and no. So one way he could try and pursue this plan is through the Medicare drug price negotiations that started under President Biden. There's a new round of those coming up. It's possible that Trump could say, yes, this time we want the lowest price that you charge elsewhere. He could try to, pursue a most favored nation plan through that. That would only be about 10 new drugs or 10 drugs total. But it's something. At the same time, yes, there are statutes that give him some power to come up with new pricing plans under Medicare, but they tend to be fairly narrow. This stuff is very carefully regulated. And a lot of the ways they have to go about buying drugs are spelled out very explicitly in statute. So that could become a little bit of a legal hurdle. That said, Donald Trump has, if nothing else, shown that he's willing to, push up to the absolute limits of the law and then, see what the courts say. So, this might be another example where he just, doesn't worry too much about the legal niceties and just goes for broke.
Right. Signs the EO now and worries about all those repercussions later. Jordan, thank you so much. Appreciate it.
Thanks for having me.
Pharmaceutical stocks are moving today as President Trump announces his aim to slash drug prices earlier today, but they're not necessarily going in the direction that you might expect. For more, we're bringing in Courtney Breen, Senior Analyst of U.S. Biopharmaceuticals at Bernstein. And Courtney, initially, some of these stocks moved down. And then we saw them sort of move up to little change because I guess the industry was expecting something different. Can you walk us through that and why this is not a worst case outcome for them?
Absolutely. Great to be with you today. It is a busy day, and there's lots of announcements and lots of stock movements, as you suggested. Absolutely right. There were a few rumors that came out early this morning that pushed stock prices lower, and there was the Truth Social post from Trump himself last night that caused some consternation. But then when we got to the press conference today, and then the signing of the executive order, and then actually seeing the contents of that executive order, there was a bit of a sigh of relief for the industry. And part of that came from the tone that Trump used. I think he even used language that suggested he was willing to go into bat for the pharmaceutical companies and defend them and help them raise their prices in other countries around the world. And there was a lot of kind of positive sentiment shared by Trump about the importance of pharma companies and that this was very much the responsibility and the challenges that America is facing is on the shoulders of other countries rather than the drug companies themselves. So that certainly was a positive reaction, and I think in some ways aligned with your previous guest. I would agree with the fact that we still don't have all the details yet, but what we do have paints a perhaps less risky environment for the drug companies over the next couple of months.
Courtney, is it your understanding that President Trump, does he have the authority, Courtney, to do what he is proposing, what he wants to do here without congressional approval and legislation?
Great question. So I think what was interesting in this executive order, where there is a request part of the order, and then there is a kind of threat part of the order. And in the request part is the suggestion that the government, the administration, will pull together proposed MFN prices, propose these to companies, and then the companies get to choose to take actions to start lowering their US prices to come into line with those MFN prices. That perhaps is kind of within the bounds of some of the actions that could be taken if the industry decides to play ball. The second part, though, the threat, if the industry doesn't play ball, is when legislation is required, kind of akin to what we saw with Biden and kind of the IRA and the MFP, the maximum fair price negotiations that are in place now for Medicare drugs. This is likely to be required to be instigated in legislation. And certainly through the press conference today, we saw reference to the fact that the intention is to load this legislation into the big, beautiful bill that the Republicans are preparing on a number of topics, including tax cuts, and ensure that that is a place for it to potentially pass. I think, however, there is a lot of steps, a lot of detail, and the devil will really be in that detail as to whether this legislation can kind of proceed, doesn't have court issues going forward, and we do actually see any implementation of this, I think, is still a question mark.
So, Courtney, do you think that the drug companies will call the president's bluff and not lower the prices as he's requesting?
I think this is something that we're going to see playing out over the next few weeks to month. They've given themselves, the administration, a 30-day deadline to begin these conversations with pharma companies, bearing in mind kind of the pharma lobbying body, pharma, and many of the CEOs have been engaged with the administration kind of day in and day out over the past couple of months on this, along with tariffs. So kind of this will be a continuation of conversations that have probably already been happening in private. Certainly what we did see in the executive order were a number of things that the drug companies have been wanting to achieve. They've been wanting to point the target to the countries outside the US and say their drug prices are too low, and we need your help there. And they've also been pointing to the PBMs as being responsible for a large part of the reason as to why US drug prices are too high. So there certainly were some olive branches given to the industry, and definitely a reflection even of the industry lobbying language in this bill, in this executive order. And so when it comes to kind of, is there going to be goodwill and trust from the industry? There might be a path here, but we'll just have to wait and see.
Well, and then I guess what I'm curious about is the international piece of this. Is it realistic that these drug makers could raise their prices elsewhere? I mean, regulations is what really has stopped them from doing so, correct? Is there any real chance, maybe with tariffs as the stick in this case, that you would see changes in that way?
It's a great question. I mean, as we all well know, kind of the US government doesn't govern kind of the non-US countries around the world. They have their own kind of legal systems, their own healthcare systems, their own drug pricing approaches, which include a variety of different mechanisms. And so certainly kind of there isn't any direct oversight or direct influence that is clear, or a clear path, or a path that's been utilized before for the US to influence this outcome. However, kind of you made reference to tariffs, and I think kind of we are in a different world order at the moment than we've been for a long time. And I think this executive order and press release line up quite closely with many of the things Trump has done over the past few months, where kind of he's cobbling together topics that span across different federal groups, different government departments, and suggesting to perhaps stop or put very severe tariffs on auto imports from Europe in a trade for being able to increase drug prices in Europe. That's something that we've never seen done before. There isn't kind of any clear mechanism to achieve so, but kind of we're in a different negotiation environment between countries than we've ever been before, and so we'll have to see whether there is any real kind of stick that can be used with tariffs to influence this, but certainly it will be going kind of coloring well outside the lines of what kind of normal standard procedure or standard regulations allow for.
Well, we've become used to that, I guess. Courtney, thank you so much. Appreciate it.
Of course.
Now time for some of today's trending tickers, sponsored by Tasty Trade. We're locking in on shares of Apple, Pan American Silver, and NRG Energy. First up, Apple getting a boost today from that US-China trade truce. This coming as well. The Wall Street Journal is also reporting that Apple is weighing whether to raise prices for its upcoming iPhone lineup this fall. But the Journal is saying if Apple does raise prices, that it will be careful to not attribute the gains to tariffs, that it will rather say, oh, well, there's going to be this new technology or that, and that's why they would raise prices. Because as we know, for example, when there have been other companies that have had some transparency about the effect the tariffs are having,
you get on the president's
doesn't like that.
bad side real quick. You do that. It was interesting. I was talking to Gene Munster over at Deepwater Asset Management this morning. And Munster, of course, is well-known, longtime Apple analyst. So I was just curious what he made of that report. And Munster's point to me was obviously there's a lot of moving pieces here, but let's say Munster said you had that 10% basic universal tariff in place. Let's say we think that's what's going to be the case. He does think if that was still the case, that Tim Cook would raise prices on the new iPhones by 5%. And then he doesn't think 5% would dent demand materially. But of course, above that, who knows?
So here's a question I have that we obviously are not going to know the answer to. The tariffs are changing, but companies like Apple that are huge behemoths that have operations all over the world, they've already said what they're going to do in reaction to the worst case scenario tariffs. They're going to move a lot of their production to India. So the question is, if now tariffs come back down, do they reverse some of those plans? Do they just do it more quietly than the announcement of what they were doing to react to the highest tariffs?
But then there's the added wrinkle of which iPhones are coming from India.
Right.
Like, is it the most...
It seems like it's the most advanced iPhones that were still going to be coming from China regardless.
Right, the most profitable, highest margin, high-end iPhones. The Journal was saying in their report today the bulk of those would still be coming from China.
But I guess I'm asking the question not just about Apple, but about all of these companies that have been scrambling to try to make an alternative plan. If tariffs go to 10% everywhere, then do they reverse some of those plans? I don't know.
I mean, I think for some of these companies, those supply chains are so global and so complex, it's just not as easy as flicking a switch.
No, it's definitely not.
All right, shares of Pan American Silver, they're sinking today after the Canadian mining company announced it will acquire MAG Silver Corporation in a transaction worth about $2 billion. So this one, about $2 billion per reports. This gives Pan American access, I guess, Julie, to a major mine in Mexico, and the backdrop, of course, being here, the rally. We've seen in precious metals this year, spot silver up, I think, double digits. So it gives Pan American access to a major mine in silver and 2 undeveloped projects in Canada as well.
Yeah, this is really what it has to do with, right? Is silver prices have been going higher, and according to the presentation the company gave, this would bring down Pan American's costs by about 20%. So silver prices up, costs down. You would think that that would be a good thing, although we are seeing the shares fall today. 2054 is how this values MAG, so it's about a 21% premium, so maybe investors not thrilled with the price that is being paid here.
No, Pan American CEO saying this brings into the portfolio one of the best silver mines in the world. Saudi's president.
And then there's shares of NRG Energy rising on another deal, topping first quarter earnings expectations and also announcing a $12 billion acquisition of natural gas assets from a company called LS Power Equity Advisors. So it's a $12 billion deal, including debt, and it gets NRG Energy 18 gas-fired power plants. Now, why is this important? Really, we have seen the utility industry and the generation industry leaning into natural gas, and so this strengthens NRG's position in that business. NRG, by the way, already owns some gas-fired plants. It also owns alternative energy sources, solar, et cetera. So this would increase its exposure to gas.
And the CEO telling Bloomberg it's kind of like finding the holy grail. Yes, that's how he put it. This portfolio seems to be the perfect fit for us. With the purchase, it sounds like NRG is also saying adjusted EPS will now expand at 14% on a compound annual growth rate over 5 years, and that is up from their previous guidance. Helps explain the pop you're seeing today for sure.
Yes.
Coming up, Federal Reserve Governor Adriana Kugler saying steeper tariffs will drive prices higher. We're going to discuss what's next for the Fed on the other side. Stick around. Much more market domination still to come. Federal Reserve Governor Adriana Kugler said Monday that steeper tariffs will drive prices higher, acting to push down incomes and lower economic growth. Yahoo Finance's Jennifer Schonberger joining us now with more on the latest Fed commentary. Jen.
Good afternoon, Josh. As the Trump administration announced a 90-day truce with China, slashing tariffs to work towards what Treasury Secretary Scott Bessent calls a more fulsome agreement, some are saying it takes what the Fed sees as risks to higher inflation and lower growth off the table. Will Stith, senior bond portfolio manager for Wilmington Trust, says the China trade deal takes some of the stagflation risk off the table that, quote, the wheels are in motion. There's a greater understanding about what both sides are trying to achieve. It's definitely a positive advancement. All of a sudden, higher unemployment is less probable. But even with that deal announcement, Fed Governor Adriana Kugler said Monday that steeper tariffs could drive prices higher, acting to push down incomes and lower economic growth. Kugler saying changes in trade policy appear likely to generate significant economic effects, even if tariffs stay close to the currently announced levels. Last week, the Federal Reserve unanimously voted to hold interest rates steady in the range of 4.25% to 4.5% for the third straight month. Traders on Monday pushing the odds of a rate cut in June down to just 8% and scaling back their bets on the number of rate cuts for the year to 2. They now don't expect the first rate cut to happen until September. Stocks roaring today as investors' worst fears over a trade war between the U.S. and China eased on the back of a trade deal announcement with the UK. At the same time, Ukraine's President Zelensky set to meet with Russia's Vladimir Putin in Turkey this week on the back of a minerals deal, bringing the end of the Ukraine war possibly closer. Trump saying today that he may speak with Chinese President Xi at the end of the week, while Treasury Secretary Bessent anticipates that both the U.S. and China could come back to the negotiating table in just a couple of weeks. Back to you.
Jennifer, thank you. Appreciate it. Well, for more on the current state of the economy and what's next for the Federal Reserve, let's welcome in Thomas Simons, Jefferies' chief U.S. economist. Tom, it's always great to see you. Obviously, big news today from the market's perspective. I'm curious how you're interpreting it from an economic perspective. It seems like the balance of risks in terms of the economists we've been speaking to has seemed to be more weighted to worrying about the growth side of the equation than a sort of more permanent inflation side of the equation. Has that been your concern, and is now that gone, alleviated? Where are you?
Yeah, I think that looking at it in terms of the balance of risks is really all that we can do at this point. Trying to put precise, pinpoint forecasts on different data points has been virtually impossible for the last 2 months. And the news over the weekend, while encouraging, hasn't made that process any easier. So I think we were always kind of on the more sanguine end of the growth forecast range. We had thought that we would see slowing in growth, but no outright recession. I do think that this takes the potential downside risks, tones them down quite a bit, especially as it relates to the labor market. I could see businesses perhaps being a little bit more patient on, perhaps delaying layoffs or reducing scale or just, kind of taking a breath before they make a big decision. And so long as the labor market holds up well, I think that we can be confident the consumer can continue to, continue to support solid pace of growth.
So it's interesting, Thomas, because we've certainly seen the soft data take a hit, right? And so the question's been, okay, when is that going to translate that into the hard data? When would you expect that, Thomas? Do you expect that?
I don't think it's reasonable to be, kind of directly translating some of the declines we've seen in some of the, for instance, consumer confidence data into significant declines in spending. There was a wonderful report that the Fed Board of Governors put out a couple weeks ago now that really dug deep into sort of, do consumers do what they say or not? And really it broke down to, if you were a consumer that felt like your income did not keep up with inflation, then you felt quite terrible about it. But that it tied together actual spending data from those same consumers and showed that they continue to spend. So long as people think that their incomes are not going to be, outpaced by inflation, and potentially now we have lower tariff scenario playing into that expectation, I think that it'll probably translate into a little bit better consumer confidence, and they keep on spending. So I don't think that that's necessarily going to show up in the hard data, unless we do end up with that sort of empty shelves scenario. Again, I don't think that that's particularly likely for the baseline, but if people run out of things to buy, then surely we'll have a contraction in spending, a la what we had like in 2020, for instance.
And Tom, what about what this means for the Fed and where you expect them to go and how much that calculus maybe changes?
Yeah, it seems like we kind of flipped the coin all the way to the other side here, where there was this concern that higher inflation or higher price levels from tariffs was going to handcuff the Fed and keep them from cutting. But now all of a sudden we're looking at complete reversal, where we have potentially stronger growth that's going to drive higher inflation and thus keep the Fed from cutting. I think if we do end up in that scenario, that's a good problem to have. That's one where the Fed can probably maintain rates at this level for quite some time, perhaps even consider raising rates again, but that would be much further down the road once we're through a lot of this other uncertainty on fiscal policy and deregulation, and once we are concretely in a higher growth environment, then that would be a conversation for a different day. But at this point, I think that their patient approach has been totally paid off, and I think that they can continue to do that for a little while longer here before potentially making a mistake by going too early.
What did you make, Thomas? There was this school of thought that given all the uncertainty with the trade and the tariff fight, that a lot of CEOs, Thomas, they were going to stand pat and they were going to sit on their hands and just forget about investing and spending, and headcount would come into question, and that would tip us into a recession. What do you make of that argument?
I've never really been a big fan of that argument for a number of reasons. One, I think if you look at business investment and how it's related to overall economic growth for the last several years, outside of investments related to AI and the energy infrastructure build out around that, and investments that were basically directly funded by government stimulus from the bills that were passed during the Biden administration, we haven't seen tons of investment in property, plant, and equipment. And on the labor side, I think that businesses have really been focused on attrition to manage headcount, basically not replacing workers who have retired or quit. And that strategy seems to be kind of status quo. I think it remains appropriate. So there's no big delta in terms of like where we were getting growth and where it might lead. Instead, I think it's just a kind of steady state thing where we don't get a real significant drag.
We spoke to an analyst at the Council on Foreign Relations earlier, and she said it is easy to undo the tariffs, but not to undo the damage that they have done in various ways. And so I'm curious how you're thinking about, even if the tariffs do go down more, even if they go down more, are there sort of, ricochets, if you will, that are still we'll see through the economy?
Might be. I'm again kind of skeptical about this argument as well. Because I think at the end of the day, rightly or wrongly, the Trump administration played their hand viewing the U.S. Consumer market as being one that lots of other people want to access for various different reasons. And I think at the end of the day, the dynamics that support that argument haven't really changed. I think there are some things around the edges that clearly have frayed. Obviously, Canadians booing the national anthem at hockey games and things like that is troubling and disappointing. But I don't think that we're necessarily at a point yet where we would see, significant long-term economic damage. And in fact, I think that perhaps, as relates to the discussion earlier on Apple with their decision to go with production in India versus China, I think it is just a good reminder to everyone who has these very complex global supply chains that for a number of reasons, whether it's policy related or it could be just exogenous, some sort of natural disaster or something, there are good reasons to look into shortening those up, making them, a little bit more robust with some, parallel systems in place. And, I think in the long run, that leads to a better system of trade globally that's a little bit more insulated.
Tom, good to see you. Thanks so much.
Likewise. Thank you.
Coming up, we're counting down to the closing bell on Wall Street as stocks remain elevated. Stick around, more market domination still to come.
Well, U.S. stocks surging as fears over an escalating trade war between the U.S. and China ease. For more on Wall Street's tariff mindset, let's get to Yahoo Finance's Josh Schaefer. Josh, what is the mindset?
The mindset seems to be that things are getting a little bit better than a lot of people thought, right? I think that's why you're seeing such a large rally in the stock market. Is I don't think headed into the weekend, there were a lot of strategists that we were talking to last week that were confident that 2 days of negotiations with China were going to lead to Treasury Secretary Scott Bessent coming out on Monday and saying, actually, we've moved the China tariff rate down significantly from where it was, and we have a 90-day pause, right? I just don't think that was the base case headed into the weekend, so you got sort of a better than expected style rally in the broad market that you would get on maybe an earnings report, right? And it seems like just the large fears that people have been talking about for the last month was, A, when was this going to happen? And B, sort of to what extent would a rollback of China tariffs, at least temporarily, look like? And it seems like for now, it's just simply better than people had hoped and maybe takes away some of the risk that was out there in the market.
I keep thinking about April 2nd. And that, that graphic that had all of the reciprocal tariffs on the various nations that seemed entirely pulled out of thin air. And market participants looked at that and they, what in the world is that, and where did it come from, and what are we going to do? Just this sheer, not panic, but like, what is going on? And so anything short of that, and everything since then has pretty much been short of that, was going to be not as bad as that. If that was the worst it could be, then like everything else, is gravy, I guess.
It helps explain something like a 1 month chart of any of the three indexes, though, right? When you look at it, obviously stocks absolutely tank for 2 days. And then the rip higher has been pretty incredible, honestly, to some extent. I mean, I'm looking at my chart from this morning. This was when we opened, but the NASDAQ is up about 6% since the morning of April 2nd. So that includes the big drawdown and then up. So it's up 6% since the morning of April 2nd. I mean, it's just kind of crazy to think about. And to your point, Julie, one thing I've been wondering about is, okay, so we have the big discussions with China now going well. And I wonder at what point maybe we're pricing in some optimism about how the U.S. stance on China then translates to the U.S.'s stance on tariffs in general and tariffs with a lot of these other countries, right? Because I think from a lot of perspectives, the contentiousness with China makes sense. And sort of the back and forth there makes a lot of sense. A lot of the other countries on that big board you talked about, I think we were looking at and saying, really? Like, is that where our issue is? And so then maybe does that make you feel better about just the overall kind of deal with tariffs? Because when you think about the rally over the last 2 weeks, the market was already sort of kind of front running this news, right? So what news are we front running more today? And maybe it's just general tariff de-escalation that people have sort of been rooting for.
I don't know. Unless 10% is the floor, and like that's it.
It certainly could be.
I don't know.
Joshua, thank you. Appreciate
We'll find the floor, Josh. I'm going to go find the floor.
While we're wrapping up today's market domination, don't go anywhere. We've got you covered with all the action. Follow the closing bell. Stay tuned for market domination overtime.